Hi, my name is Sean Roosen. I'm the founder of the Osisko Group with Bob Wares and John Brzezinski. I was the original CEO of Osisko One, which we sold to Agnico and Yamana in 2014 for $4.1 billion. Also the founder of Osisko Gold Royalties, which is now a $4.3 billion royalty company. And I'm now 100% focused on Osisko Development Corporation, which has the Cariboo Gold Project in central British Columbia, as well as the Tintic Project in Utah, which is our core focus at this point in time. I'm very glad to be back again after a year on the same bench that we were on last year.
Literally the same bench. Now, you're one Osisko company shorter now than when I last saw you.
Yeah.
That's good. That's not bad.
So Osisko Mining 2 has been sold to Goldfields, or is in the process. It's not concluded yet until the end of October.
Right. It's
an all-cash offer for $2.16 billion. It's about a 65% premium to the stock price.
Yeah.
85 on more like a 30-day VWAP.
Yeah.
So it's a very good deal for shareholders. A bit bittersweet for our group because spectacular discovery at Windfall, one of the highest grade deposits in the world, and certainly the highest grade deposit discovery in the history of Quebec. So another good one for Team Osisko.
So why offload it? Why now?
I think the stock had been somewhat range bound, and 65% premiums don't come around every day, and it would be remiss of anybody to not show that to the shareholders and let them decide. And I think, for the most part, at $4.90 to the share price. That's said and done. The deal's not closed yet, so we'll see what happens. There's always last minute concerns, but the circular has been filed and the deal is in motion for a shareholder vote at the end of the month.
Okay. Let's park that up. Let's get onto Osisko Development. There's a lot going on here, and I guess the question most people want to understand is, what's the next major event, and is that requiring a permit?
Yes, well, Osisko Development is probably the next Canadian mine to get a permit. We filed our EA certificate request in 2019. We received the full EA certificate, the first company through it, in October of 2023. So the EA process is complete, and now we're in the final operating permit and construction permit, which we hope to goes to referral to the government sometime the end of October or early November.
Right.
It's for 4,950 tons a day, so it'll be a big underground mine. Yeah. At that rate, we have about 2 million ounces in reserves, another 1.57 million ounces measured and indicated, another 1.7 million ounces in the inferred category. So it's a very big deposit, but the one number I wanted shareholders to take away today is that we're averaging 14,000 ounces per vertical meter that we've gone down. For every 100 meters that we've gone down, we've averaged 1.4 million ounces. We've drill tested this deposit down past 1,000 meters, so we know it goes at least that deep. Mm-hmm. So this will be a big project for a long time to come, and this is the first portion of it, is phase one.
What's the end game here, though? Because like your range bounds with mining and with development, it's been a sort of downward trend. People are waiting for something to what's that step change moment for you?
So I think getting underground, we've got a bulk sample that we should be taking in October. We're 550 meters into the ramp now.
Yeah.
So that's gone very well. We pioneered a new technology, the road header, all electric, grinds, no drill blast. So we're able to use that equipment for 50 to 70% of our work. So it reduces our cost per development meter by about $1,000 a meter.
Right.
And it's averaging quite well, about 6.5 meters a day. So that was one piece of technology we were changing. So the bulk sample will also do a verification of the drill indicated grade, which is overall 3.78 grams, which is almost twice the grade of Goldex, which is Agnico mine in Val-d'Or at 1.75 grams underground, and Young David's is at 2.2. So this is of the bulk tonnage underground mines. This is one of the higher grade ones. It's almost the same grade as Agnico's LaRonde mine. So it's quite high grade, and I think that once we get underground and we start feeding this thing, it opens up a very big portion of the exploration. We stopped drilling at a vertical depth of about 350 meters because we wanted to focus on the permit. The next two mines are probably vertically just below this one. Right. The most important thing about this project, we have 4.4 kilometers of strike length, so we can generate a lot of stopes.
Yeah.
One level generates about 900 stopes. So we need about 350 stopes a year. So we're able to look at this thing and say 5,000 is a good start. But if we're able to develop the next two underground levels, we hope that we can step this thing up to
Right, so
a bigger mine as we get further into it.
you know what you're doing operationally, but I sort of come back to maybe what the market's looking at.
Yeah.
The figures I saw were done at $1,700. Obviously, $2,500 is exciting, and that kind of nearly $2,600 actually, isn't it?
Yeah, corporately, the big target for me is to set the stage to be a $10 billion company.
Right.
We have the asset base to do that. The steps to get there. Number one, get operating at a couple 100,000 ounces a year with this. So it starts at about 220.
Yeah.
And then the next leg of that journey, hopefully we'll be able to double that to 10,000 and on to 15,000, assuming we get success at the drill bit below us. We have 83 kilometers of strike length, of which we've only tested 4.5. So this deposit has a chance to be quite big.
Yeah.
And if you look at it historically, Newmont and JP Morgan, all these guys were in there in the 1920s and 30s. And there was 20,000 people working in this camp, but they were only mining these high-grade replacement deposits. We've done pretty much what we did in Malartic, is we've come back in and turned the whole thing into a bulk tonnage deposit.
Right.
Canadian Malartic, when we got there was 8 million ounces have been mined out historically. We sold it with a pit at 14 million ounces, and now there's 16 million in the underground again. And by bringing in highly mechanized bulk tonnage mining techniques, we think that this is going to be kind of our version of Canadian Malartic, the underground.
Right, so you talk about lots of technologies to make it more efficient for the bulk stuff.
No existing technology, nothing new really.
Yeah, for sure. You're not reinventing the wheel here. I get it. No one likes that. But come back to my point about the numbers I've seen are 1,700. Prices are higher today. Does that change, things like cutoffs and how do people kind of read the way that you're going to develop things?
Well, a bunch of those ounces are in the money at the current spot price. If
Sure.
we look at $2,500 gold right now, or $2,400, our feasibility was at $1,700.
Yeah.
And our internal rate of return then was around the 20% mark. So we're definitely we're doing a revised feasibility study, and we'll be up around the $2,000 mark.
Okay.
At the end of the year.
And is it, what did you say the ASIC was? Is it below 1,000?
The ASIC was $990.
You're right. Okay. So the margins are there.
They're very much there.
So everything stuff's, because you talk about an initial capex and then obviously sustaining capex thereafter. That's going to come out of production, right?
Well, the big thing about this project is it's very scalable because we know where the next 2 or 3 mines are.
Yeah.
And there's another one about 8 kilometers away from us that we think has the ability to maybe be open pit. It was open pit in the past, back when gold was $30 an ounce. So it's certainly a very prospective area. This was a mine. This started mining here in 1862. So there's quite a bit of data there. There's 150 kilometers of underground workings, but they were chasing these high-grade 15 to 20 gram replacement deposits, and they left all these big bulk tonnage targets in place. So we have pretty good knowledge of this area, and it's a big land package. It's over 500,000 acres, about 2,000 square kilometers.
Yeah.
So my goal was, sort of 5 to 7 mines with a central processing facility in this mining camp.
In an accelerated time frame.
In an accelerated time frame, and ramp access to start with.
Right.
Eventually there will be shafts in this camp.
Right.
And there has been in the past. But they didn't mine what we're mining. That's the whole
I guess where I'm going is, big is nice and big can be beautiful, but profitable is even better. And if you're going to, really get into it, there's going to be a period of reinvestment. I plan money back in the ground to get the scale to be able to eventually show, global.
Well, the rough calculation is for the first 200,000 ounces, we're going to spend probably around 500 million US. Yep. And then the next leg of that journey is probably more like 150 to 200 million to go from 5 to 10,000. And each sort of piece of the clubhouse sandwich, if you will, if we look at it in 3 layers, is basically 3 to 5 mines side by side, going at depth. So if you look at the capital costs here, we're actually in ramp access, so we're about a third the cost of a shaft.
Yeah.
So it's really a very good return on investment. And once you have your mining camp up and running, the other key aspect of this project is we're on BC Hydro. So we're at 6.6 cents Canadian, about 5 cents US a kilowatt. And we have pretty good access to pay. We're going to start at 40 megawatts.
Right.
We're about 45 minutes from the town of Quesnel, which is a labor force of about 30,000 people. And there's 6 sawmills scheduled for shutdown in our region. So we're getting a lot of local support to get this mine up and running. It'll be a very good mine to work in because it's very mechanized, very clean, a lot of electric equipment. 70% of our underground equipment will be electric.
Yeah.
And it's, because it's big scale mining, we don't have a lot of small equipment around. So.
Right. you obviously referenced Malartic deliberately.
I did,
as a comp here. Does this thing excite you in terms of what attracting the right sort of bidders to come in and do this, or is this something you feel you can get off the ground and look at more as an annuity stream of cash rather than a big?
Well, I mean, I never really set out to sell Canadian Malartic. It was other people that provoked that situation.
Yeah.
It's the 9th largest gold mine in the world and the largest one in the history of Canada. Over 35 million ounces in that camp. We see this as a potential to, I don't know if we'll get to that level, but we see a good potential here to be able to double or triple what we know so far.
Yeah.
And drilling from underground is about a fifth the cost as trying to do it from surface. So getting underground is the key component to drive value here. I think if we can prove in the market that we've got eyes on a much bigger resource, which right now, 1.4 million ounces for every 100 meters. If we just get to 1,000 meters, we set the stage, potentially to investigate a 10 to 15 million ounce style deposit. So that's kind of key. And then the repeat 8 kilometers away at the Proserpine, we haven't drilled that in a minute. We sort of stopped drilling on this one because we did acquire our Utah property as well.
Yeah.
And we were in the permitting aspect. We started permitting in 2019. The government said it was a legislated 3.5 year timeline for EA. That was respected. So, hats off to the BC regulators and government for getting that done. And then we're in the final leg now. So the 3 things that we need to make life work here is that we need permits.
Yeah.
We need gold, we've got that, and we need power, we got that. So
do you view this as coming back to that again, annuity stream kind of comment of mine? Do you view this as much more valuable for a long time coming, or do you want that one to happen? Because when you said to me Malartic, I didn't. You said I didn't start that Malartic sale thing. I didn't necessarily want to do that.
Yeah.
And you've just taken a 65% premium on the Osisko mining component, which is kind of 65% of what in a
at the end of the day,
market, right? So
at the end of the day, the shareholders own the company and they get their say. If we see an offer, we will show it to the shareholders.
Right.
But I don't design my business plans around sale.
Right.
I drive towards the goal of being a 500,000 to 600,000 ounce a year producer, and whatever happens along the way.
But you know what timing's everything? Because it's kind of like, do you make it, what you can design is make it defensible, less attractive for
Well, right now, Osisko Royalties owns 38% of the stock, so it'll be a more polite discussion this time.
Yeah.
Some of the first discussions were a little more aggressive.
Yeah.
So that, from my standpoint, I'm a company builder. My goal was always to build a great Canadian mining house.
Yeah.
I continue on with that GPS destination logged in, and whatever happens along the way happens. We, as the Osisko Group, we've had a significant amount of success. We also have Osisko Metals. We have O3, we have BRW, and a few other things. So we've incubated 19 public companies, and I've been able to ring the bell on the New York Stock Exchange twice. Interesting things do happen, but our simple strategy is to continue to try and build assets that would set the foundation for a larger company. I mean, if you look at Agnico, they're now $50 billion.
Yeah.
The first big asset they got was Canadian Malartic, then they got Detour.
Yeah.
But if you look at it, Canadian Malartic and Detour, that's 1.5 million ounces. It's the same. It's the same as the next 5 mines put together, right? So So I've been focused on these larger assets where we can go to 500 million ounce targets.
Right, and I sort of belabor the point about defensible, because in a market environment like this, where there has been a lot of M&A of recent weeks and months, people are in the mood. They're generating more cash than they've generated before. Gold price.
Well, I think certainly.
Right.
Certainly, I've never gone to bed in the last 24 years as a public company CEO without the threat of being sold.
True.
If you have good assets, that's the way your life goes. If you don't have a bid, it's because your assets are not great or there's another complication. In our case, the Osisko Group, we've always had coveted assets. And I think what we have done well is asset selection.
Yeah.
We're pretty good context players. We know which one's better than the other.
Yeah.
And collectively, we have one of the deeper science benches out there. We've been able to do things. Canadian Malartic was a case in point. We went to a camp and we said, how can it be that you have 290 million ounces come out of the Cadillac break, but there's not a single bulk tonnage mine in all of them? It's impossible that that it doesn't exist. And we looked for it and we found it. But nobody else was doing it.
Here's an interesting things coming out of the conversations I had last week and this week, and there's a lot of acquisitive companies. They've got the money, they've built up the cash to do that. I said, well, there's a lot of choice out there, and it's like, not really. Not all producers are good quality, and not all developers are good quality. So the choice is limited. So therefore, there's quite a lot of competition for a few morsels.
Yes, well, we'll see what happens when the Newmont process finishes, because there's quite a few companies tied up in that process.
Yeah.
So I do expect, as you say, for M&A to accelerate once that process is over.
Yeah.
There's 5 mines in play there.
Yeah.
So we'll get more aggressive.
Right.
And it's one of the reasons that if you look at the list of things that haven't jumped in value right now, ODV would be one of them. And we're just in the process right now of making significant milestones that are probably more important for corporates than just the equity markets. The permit is the big one, and obviously the bulk tonnage underground verification of the ore sorter technology and the reconciliation between the drilled grade and the actual mine grade.
And you think
so those are kind of big catalysts.
Those are the big catalysts, and it needs it, because you've been under pressure for the last 4 or 5 years in terms of that stock price in a depressed market, quite frankly. And there's
well, it's we're a cyclic business, and to see the gold price so disconnected from the gold equities is a little disconcerting. But we've seen some companies catch up on that valuation. We saw Alamos go to $11 billion now off a 500,000 ounce a year production. So, there are some companies that are gapping up, and most of them in good jurisdictions. I think political risk is being priced a little differently than it was, say, in the past. And then but there's political risk in the Western democracies as well, with ESG movements and that sort of thing as well, that we didn't have as much of in the past.
Look, I don't want to go down that track, just yet, please. But look, I know you've got places to be. Thank you for making time for us as ever. Feels like Osisko Development's got some real near-term catalysts.
I think this is the time.
In a really strong market.
This is the time, and we've always been lucky on timing. I'd hate to say that we're good at it, but as I say, if you want to score the winning goal, you have to be on the ice and you have to skate your shift. So we're on the ice and we're skating our shift. That's all.